Jobs in America. The Midwest is facing an unexpected problem. Too many open jobs, not enough people. The Labor Department's most recent data shows the level of job openings are outnumbering unemployed workers, something not seen in any other region of the country. My guests next are seeing this issue play out right on the front lines. Joining us right now are Sukup Manufacturing Company President Charles Sukup and regional economist and associate scientist at Iowa State University, Dave Swenson. Gentlemen, thanks very much for joining us this morning.
Thank you.
Thank you, Maria.
Charles, let me kick it off with you. Tell us about your business, the issues that you're facing when you look to hire.
Well, we're a manufacturing business. We make grain storage, grain bins, grain dryers, steel buildings. We're located in a town of 1,200 people, Sheffield, Iowa, that's 100 miles north of Des Moines, and we employ about 600 people there, and we have a very difficult time finding new employees. We've hired 91 employees since the first of the year, and we're trying to hire about 10 a week. And it's difficult to get the numbers that we need to grow and serve our farmer customers.
You know, yesterday there was an op-ed about this from Dan Henninger in the Wall Street Journal, Dave, and I asked Larry Kudlow about it, the National Economic Council director. Here's what he had to say about the labor shortage. Listen to this.
Labor force participation rates and the employment to population ratios is still low. They're both rather low, which suggests that right here in the USA, we could have, I don't know, 8, 10, maybe 12 million workers with the right incentives and the right opportunities. Now, we are seeing in some sectors a bit of a shortage, I agree, but wages rising will bring people into the workforce. That's very important.
What about that? How does that apply to Iowa, Dave?
Well, wages rising would help, but our problem is much more serious than just the simple supply and demand. What we have is an absence of supply. We've had high outmigration from our rural areas. That's an outmigration pattern that's been going on for over a quarter of a century, but it's become much more acute over the last decade. We have in the area that Mr. Sukup talked about very low unemployment rate. It's just 2.7%. We don't have an idle workforce or slack in our workforce that just needs training. We actually have an absence of workers. Rural areas are consistently being outcompeted by more metropolitan economies, and it's drawing our young, skilled talent. And when I say young, I'm talking workers from 25 to 44. It's drawing that skilled talent into those markets and leaving the rural areas with fewer and fewer qualified, talented people to draw from.
Dave, this is Brian Brenberg. I'm a Minnesota guy, and I observed what you're talking about here. The issue I think you're pointing to is when you train workers, when you give them new skill sets, at the same time you give them new opportunities and options. And so they're moving from these rural areas to more metropolitan environments because that's where they want to live, that's where they want to work. And so you sort of get this drain out of the rural environments, which means the skills training kind of works against what you're trying to achieve. Is that right?
It is right, but, well, bottom line is we want to provide as much human capital development as we can. But when you provide that development, skills training, community college education, you do create options, and one of those options is mobility, especially among the most young. So, yes, indeed, that is an issue. We don't have a mechanism for resettling people back into rural areas, and we've watched over the years that their preferences are being expressed in the marketplace. Right. They're making rational decisions.
Stephanie, this is an economic issue. First, give me your thought about that.
Well, two observations. One, I think the problem could be cured by the fact that taxes in states like New York and California are becoming so punitive that people might decide to move to Iowa for better opportunities there. And the second one is, you know, this speaks to the broader problem where all of the employment growth we've seen has been in the ages 55 and older. And as this gentleman was saying, the age 24 to 45, which is the key bracket he's targeting to hire people, he can't find people. I mean, we've got some kind of structural issue there where all the jobs seem to be going to older workers, and you know, we've got to figure out how to address that issue.
Yeah, all of this with trade tensions between the U.S. and China reaching new highs this morning. Charles, the president has proposed an additional $100 billion in tariffs on Chinese imports. The tariffs started with steel and aluminum. You've seen a 40% increase in steel prices since November. What are you expecting as a result of what's happening between the U.S. and China?
Well, we're very concerned about it. Nearly all Iowans are, between the grades, soybeans, and pork going to China. The steel tariffs, we've had to increase and raise prices to reflect the costs that are coming into us. So it's very concerning. We're hopeful, as the spokesman from D.C. are saying, that it'll all work out and things will be resolved at a better issue. But it makes us nervous.
Kevin, Kelly, how do you see it? So Iowa, the second largest producer of soybeans, farmers are grappling with this 25% tariff on their crop.
Yeah, I think this is an important issue given the fact that China is actually, it hurts them more than it hurts us. But this is more of a political situation where they're trying to attack states that Donald Trump had won for the presidency that are coming out for the midterm elections. So I don't see this as a sustainable thing. And so now everyone's talking about, is the president going to blink? Is Xi Jinping going to blink? Unfortunately, you do have everyday Americans, especially in the Midwest, that are affected by this. So what they're going to have to do is just figure out future business decisions in supply and demand and whether they can use the futures markets to hedge. I mean, this will impact.
Well, and Charles mentions uncertainty. Charles, maybe you can just talk about what does uncertainty mean for you? When you don't know where these tariffs are going, how does that change your investment decisions? How does that change your hiring decisions?
Well, right now we're being driven by the low grain prices, and the ag economy has been suffering from lack of income and lower prices. And that's where our business, storing grain, makes sense. That's the one way farmers can make a profit, is by having and adding grain bins and grain storage with it. So, but fundamentally, you've got to get more income into the ag economy. And these tariffs, when you see that in a low time of prices, that things could even get diminished more, that's very scary.
And the markets obviously have been viewing this as uncertain. What are you expecting in terms of these markets and the reaction to all of this, Stephanie?
Well, again, I think we are in this trade derangement syndrome where every transatlantic, trans-Pacific tit for tat sends the markets all over the place. And again, in the broader scheme of things, I think they're missing the bigger picture, which is, one, this is a negotiation, and clearly we've seen the way Trump negotiates. There's a lot yet to come, and it could be, too, part of a larger discussion that involves North Korea, in which case, you know, it would be very interesting to see how it plays out from a geopolitical standpoint. It might have, you know, some upside at the end of the day to having this.
Well, it's not necessarily North Korea. I mean, this has been playing out for decades. You even had Jamie Dimon talk about how this is impacting. I mean, listen,
in his annual letter yesterday.
Yeah, exactly. So, I mean, this is reverberated throughout our economy, where there's been theft of intellectual secrets. We can't do business over there unless we give them our intellectual property. They own 51%. They're not an open economy. American businesses lose over in China. And it's not even American businesses. It's it's global businesses. Think about this. Why did TPP, why did that even come to be? Because other Asian countries didn't want to do business with China. They didn't like the way they did it. And so they decided to form a partnership between themselves.
Yeah, it's a great point. We will leave it there. Charles, Dave, good to see you, gentlemen. Thank you. Charles Sukup,
Thank you.
Dave Swenson joining us this morning.